Hello, this is Wes Bridle, and this is another Kingdom Calling Economic Update video. This video and all these like it are short updates to supplement the Coming Storm video where we gave you the big picture of what's going on and what will be happening over the next decade in this country. This is just a short information to tell you what's been going on in the last month. If you haven't seen that video, I highly recommend you go watch it. The link is near here and it's for free. So I'm going to have two videos on gold and silver to wrap up this series of videos. Ted Butler, if you're not familiar, does incredible work on what the commercials and the bullion banks are doing in the gold and silver markets. And he basically proved that the commercial short covering was the biggest contributor to the massive rise in gold recently, as well as the massive rise in silver earlier this year. The media tends to say that a lot of people were running into the market and speculating on it going higher, which there's certainly some of that. But there's commitment of trader reports and big participation reports that show exactly who's doing the buying and selling. And he documented that it's actually the bullion banks that have massive short positions that are getting worried. They're getting scared that they're sitting on large paper losses right now. And they have the potential for unlimited massive losses that could take down JP Morgan. Could take down these huge banks. And so they're getting scared, and so they actually bought a ton of their positions back. And that was the big mover in the market. Not to say they haven't shorted some more since then, because they can't buy back all their positions. They have way too large of a short position. We've talked about this in previous videos, so I'm not going to go into it in length here. But that's an interesting thing to see, that they're getting nervous, and so they move the market more than anyone. Because if you think about it, if the largest seller in the market becomes the largest buyer, there's no one who's left to sell. And so, well, that's why the market moved in such a dramatic fashion, because there's not any other big seller on the market. And it also begs the question, another thing Ted Butler went into is, if the largest seller on the market stops being the largest seller because they're nervous about the position that they're holding, it could lead to massive volatility because the liquidity that the market has known for so long disappears. And so get used to big price swings, but overall get used to much higher numbers. Venezuela is moving the reserves from England and talking about positioning them in China, Russia, Brazil. We don't know if it's because those countries offered to loan them money and they're requiring gold as collateral, or if Venezuela has just become aware of the fact that the US, England, the Western powers are using paper to act like they have way more gold and silver than they have. And you know, if Venezuela keeps their money in England or their gold in England the way they're currently doing, that it might not end up being there when the music stops in this game that the Western powers are playing. So on one hand, it's perhaps a very smart move. I'm certainly no fan of Chavez or Chavez-led Venezuela. I have nothing against the Venezuela that excludes Chavez. But this is a smart move for them to actually get hold of their own gold, and it's interesting to see if more and more countries do this. The whole gold pyramid scheme, gold and silver pyramid scheme they have going is going to blow up. And so, interesting, on a similar point, Kazakhstan is locking up their home mined gold. So you can go be a mining company in Kazakhstan, but when you sell your gold, you have to sell it to the government, and then they'll buy it at market prices. Bolivia has just come out and done the same thing. China and Russia have been doing this for years. Let's see, is there another country? Venezuela, that's also part of the thing that Venezuela announced. So it becomes an interesting thing. There's far more demand than there is supply for gold in the world. And now you have more and more countries that are saying, we need gold supplies in our country. And so when you sell gold you mine here, you're selling it right to us. And so, again, that's hugely bullish for the gold market because the suppliers aren't supplying anymore. That means what little supply is left, that's what we all get to fend for. James McShirley did a study. Since January of 2010, the London PM gold fix, the London market has two fixes during the day, the AM fix and the PM fix, where they come to a price and then they say this is the price. They do that twice a day. Well, the AM fix is before New York opens, so that's their own separate market. The PM fix now you've got London open and New York open. So the price is adjusted based on what's going on in all the open markets. And the COMEX has by far the most volume of any market. So America kind of controls the price when it's open. And this McShirley study showed that over this 1.5 or so period, that the PM gold fix was lower or within $5 of the AM fix 83% of the time. So the vast majority of the time, the PM fix was lower. So the price went down between AM and PM on the London market. And yet this is all while gold rose 41.5%. So in a massive bull market, for a period of time when New York was open, the price was down. There's been other studies of this where over a period of years, the price of gold, if you just calculate the time when New York is open, the price of gold has gone down for years and years and years. Of course, in reality, the price of gold has gone way up, but it's happening when New York's not open. And so that, again, is obvious proof that the price is manipulated in New York. There's no other feasible way why that would happen. And let's see, COMEX only has 27 million ounces of silver left in inventory. That's $1 billion. That could be cleaned out at any time. That's a very small amount of inventory, and that's the main inventory in the world. Central banks used to supply 400 tons of gold to the market each year, but now central banks are buying 400 tons. So in a 4,000 ton market, there's an 800 ton swing. That's 20%. Again, hugely bullish for the price. Gold, Chinese demand growing by 38%, Indian demand growing by 25%. I didn't write down the number for Turkey. China and India are the biggest buyers of gold in the world. So when their demand is rising by these huge percentages, that's a massive indication of much higher prices to come. Turkey is not as big a player, but their economy is doing pretty well. It's a fairly large country, and they're growing in demand as well. So again, where's the gold going to come from? Dubai gold dealers say business is up 100%. Gold has become highly correlated with treasuries. This is pretty interesting lately. Historically, these are kind of opposites, but lately when people think of safe money and where they go, they've been running into treasuries. I think that story will end within a few years, but that's still left to be determined, and running into gold. So right now, the safe havens of the world are U.S. treasuries and gold, and they have very high correlation with each other. Thanks for watching this video. Again, if you haven't seen The Coming Storm, I really recommend it. You can do so for free. God bless you.